Welcome to the Accounting Arc Podcast, where analysis, reaction, and comedy collide to tackle the big topics from the world of accounting and beyond. Join our trio of transformation agents as they discuss the hottest topics in and out of the profession, from breaking down industry trends, to reacting to everyday events, to uncovering the hidden humor in numbers. With wisdom, insight, and a dash of levity, they're proving that accounting isn't just about the numbers. It's about life. Because after all, accounting is in everything. The Accounting Arc Podcast starts now.
Welcome back to another episode of ARC. I have the honor and the privilege of having Ron Baker on the show with me today to discuss tariffs and the whiplash that we're seeing around it. I don't think Ron needs much of an introduction, but I did learn something very fascinating about Ron. Would you mind sharing what your major was in college?
Well, I majored in accounting and minored in economics. I'm actually just a frustrated economist, but I just didn't think I could get a job or make a living doing it.
Yeah, well, I also was very close to an economics minor, and the reason I didn't pursue it is complete impatience. But
I hear
when
you.
we look at that from the perspective of accounting and economic theory, I loved what you were saying around, the difference between the two, right? So economics being a theory, I'd love you to dig into that just a little bit.
Yeah, there's an old joke about two graduate economists, econ students, sitting in the class, listening to the professor at the chalkboard, and he's drawn some diagram, and then he puts up ceteris paribus, right? Here's all the things that we're holding constant. Here's all the assumptions we're making. And one of the grad students turns to the other and he says, "Where would economics be without its assumptions?" And the other one says, "It would be accounting."
Well, good for us that we studied both, right?
Accounting's an identity equation, right? Assets minus liabilities equals capital. It's true by the nature of the way it's set up. Economists deal with theories, not identity equations, things like supply and demand, where you have to make certain assumptions and construct a theory to explain the world. And that's why I found economics much more intellectually stimulating than just accounting.
I agree. I think it's a very fascinating area of study. And so today we're discussing tariffs. So it's a huge topic. We are seeing threats of tariffs being opposed, and also, a lot of people trying to figure out, what does this mean for us, right? And so today I'd like to discuss a little bit about what that means for our industry specifically, also how that affects us holistically in this economy, in this country, what that looks like, and also why it is good or bad or indifferent.
Yeah, no, I'm looking forward to it.
Awesome. So first off, I think the interesting piece of the tariffs that we are seeing threatened and imposed, I think, in coming very soon, is very political in nature, right? So I'm curious about your opinion on, does that work as a political strong arm?
Yeah, I don't think it's a good policy. And I'm more interested in the policy. I don't think it's good politics either. Usually, if you don't have a good economic policy, you don't have good politics either, right? I mean, good politics come from good economic policies. And there's probably no greater policy question that's misunderstood than the whole issue of balance of trade and are we running a deficit with other countries or a surplus or whatever. And people are very clear-headed on a lot of issues, but when it comes to this one, I think there's a lot of superstition or a lot of myths around it. I mean, one point I'd like to make just at the start is the USA is wealthy because it's been a free trade zone since 1789. We don't worry that Minnesota runs a deficit with Massachusetts, or we don't worry that Mississippi has lower wage rates than other states. We don't put tariffs on one another. In fact, Trump's tariffs on Canada, if Canada became the 51st state, there'd be no tariffs. So what's that tell us? It tells us that, one of the reasons we're rich is not the only reason, but it's one of the reasons is because we've already got a 50-state free trade zone since 1789 when the Constitution was ratified and put into place. The Constitution disallows any tariffs between states or any other types of barriers or taxes. Wouldn't the same logic apply to the rest of the world?
You would think. And also, I think the concept of trade deficits is a very interesting concept, right? When you're looking at tariffs, the fear is it's going to create a bigger trade deficit, right? And what does that look like, right? What does that do to an economy, or does it matter?
Well, Adam Smith, he wrote this great book called An Inquiry into the Nature and Causes of the Wealth of Nations. He was trying to figure out why some countries were wealthy and some countries were poor. But he wasn't studying the poor countries. He was studying the wealthy countries. After all, it doesn't do any good to study poverty, right? If we could study poverty and find out the root causes, what would we do with that information? Create more poverty? What needs to be explained is not poverty. That's the natural condition of mankind. What needs to be explained is wealth, right? Because wealth is the only known antidote to poverty. And one of the things he did in that book in 1776 is he completely demolished the mercantile system fallacy. The mercantilists thought that the global volume of trade was fixed. They thought it was zero sum. If one purchased from one country, then the advantages went to the country and not the other. So somebody loses and somebody wins. They thought that wealth was equal to a positive trade deficit. And that's when we got into accounting flows for trade. In fact, double entry accounting greatly facilitated the advance of tracking these trade deficits for the country. But I would argue that trade deficits are an accounting fiction. They don't explain the underlying economics behind trade. And I'm happy to expound on that if you want.
I would love you to, because I think it's a very interesting concept, because what I find in today's society is we have keywords, right? We have words that people are talking about, they bring up, it ends up in the media, they're political talking points. We're seeing them flashed in front of our face on a regular basis. And, they are used to, I don't want to say manipulate, but influence the way that people think about economic policy, right? And particularly tariffs. And so, what I have seen a lot expounded on in media lately is saying, we don't want a trade deficit, right? We don't want that, right? That seems like a bad thing because then we're exporting jobs. We don't want to export jobs. We want US-based jobs to support this economic theory. And so, I think breaking it down into let's understand what the fundamentals of this equation are and how it can be used, or if it's completely irrelevant, is very important. So please, if you have more thoughts on that, I'd love to hear it.
Yeah, and by the way, Liz, that's a great point because you're absolutely right. The language is really important here because a trade deficit sounds terrible. Right? It sounds like, well, Trump always says, well, Canada's ripping us off or whatever. But when you think about the economics behind this, you run a trade deficit and I run a trade deficit with my local grocery store and Amazon. I don't buy anything from Amazon. So I have this massive deficit with Amazon. On the other hand, you run a trade surplus with your employer or your firm if you're self-employed because it pays you, right? And it just doesn't. So what? If I buy a Lexus from Japan, then the only reason I bought it was because its value to me is greater than the price I paid. The government doesn't have anything to do about it. I think the biggest point that I can make today is countries don't trade. People do. And just like if I want to have green shag carpet in my house and you're my neighbor, well, it's none of your business. Right? Even though it's hideous looking and it's terrible, but it doesn't affect you. So what we buy as individuals has no bearing. I'm wealthier because I own a Lexus, because I prefer it to all the alternatives. And if I was denied that choice because they slap a 25% tariff on it, I'd be poor. Just like if I couldn't buy wine from France or Chile or, the reason,
Wherever.
the reason we're wealthy is because there's more goods and services available. And to the extent that we try and block other countries from or block our citizens from importing products, it's kind of insane. Just take this to a logical extreme. If it was true that wealth was determined by exports over imports, in other words, you should run trade surpluses, then the best thing for all countries is to sink ships at sea. I'm talking about the ships that carry products, right?
Yeah.
If we sunk them at sea, well, then there'd be no imports, but there'd be all exports. That's crazy, because the reason we produce is to consume. I am not gonna stop my desire to buy China's cancer treatment because it would add to the trade deficit.
Right.
If China or any other country that we trade with comes up with the cure for cancer and we don't make that available to our citizens, or we slap a tariff on it, that's absurd. Then we're poor by definition.
I agree with you. And I think it's very interesting that we have taken a macroeconomic theory of trade deficit and broke it down into a microeconomic theory of, I think, the subjective theory of value, right? So each individual in a microeconomy in any instance has their own subjective theory of value, and what value they place on goods and services does not influence this macroeconomic trade calculation or accounting for what trade looks like. And it really is just that. It's an accounting, and the implications, there might be better measures for those implications, right? And when we start relating that back into what we see in other accounting is, if you're tracking the wrong metrics, you're looking at the wrong KPIs in a business, you're not going to have the right result, right? And so all of this focus is on an interesting metric tracking from an accounting perspective that may or may not have any actual value in achieving the goals that this administration or any other government is attempting to achieve. It is more a way to explain things to people in a way they might potentially be able to understand or not.
Right. No, it's a great point. I mean, I don't have much faith in macroeconomics. I think macroeconomics is microeconomics done poorly. I'm much bigger fan of looking at micro, breaking it down to the individual, the human behavior. And that's really what we're trying to do here. And just to relate this to accounting, because accounting did facilitate the tracking of this, trade surplus or deficit. If you think about it, in the real world, and I'm going to say this, and it freaks people out when I say this, especially accounting audiences. In the real world, debits don't equal credits. Because in the real world, when you buy something, you're only buying it because it's worth more than what you paid. So if I go to Starbucks this morning and spent $5 on a latte, I only did that because it's worth more to me than $5. Now, accountants get hung up in how much more, right? Is it $5.10? Is it $6? And how do you know? Well, it could be $20 because I could be hung over from last night. It's tequila shots. And
if you're in Vegas, it's $20.
Exactly. Yes, exactly right. But the point is, accounting only records a transaction at an agreed upon price after the fact. And it doesn't take into account the customer's profit. We're going to record that transaction, $5 at Starbucks, debit, cash and credit sales. And I'm going to come home to my fastidious home accounting and record $5 entertainment expense or whatever, coffee expense and credit cash. So it looks like the whole world, debits equal credits, everything's in balance. In the real world, that's not what's going on. In the real world, I made a profit from that transaction. But when accountants talk profit, they only talk about the seller's profit. They never talk about the buyer's profit. And all transactions, including foreign trade, are win-win. That's the only way they could take place. In other words, the only way a transaction ever takes place is if the buyer and seller disagree about the value of what's being sold.
Let's break that down, right? So If I value an import, let's say I want to buy a Japanese car and there is now a 25% tariff on top of it, I might say that's too expensive for me. I don't value it that much if the company is just adding that percentage on top. So what happens? Does the company then readjust their price, slim their profit margins, and deal with the tariffs internally? Or does the company sell fewer vehicles at a higher price? These are all accounting issues to figure out for the companies. But ultimately, what we have seen throughout history is it means increased consumer prices.
Yep. And a deadweight loss. I mean, if that Lexus is available and I can't buy it because that 25% tariff just knocked it out of my perception of value subjectively, then that's a deadweight loss to me. I'm not going to get my first choice. I might have to go buy a second choice. Now, whether or not the company or the consumer is going to bear the cost of the tariff, that depends upon the elasticity of the demand curve. Right? Mm-hmm. As you know, yep. if you've got, if you're selling something that like a cancer drug, you're going to pay whatever and you're going to absorb the cost of that tariff, even if you have to go into debt. But the point is, you're going to have to work harder to get that cancer drug because of that tariff, which makes us poorer as a country, as an individual and as a country. I mean, one of the reasons why countries are rich, like Adam Smith pointed out, is because we have specialization of labor and division of labor. So, you and I specialize in accounting services, and that's pretty much all we do, right? So that's specialization of labor. And then division of labor is when you take things and break them down into component parts, like in your firm or in a factory. And therefore, if you're making pins and you have a team of 10 people, if each person had to make the entire pin themselves, you might produce a pin a day, but if each person does a portion of that pin, makes a portion of it, and then they all put it together, they can probably make 50,000 per day. This is Adam Smith's famous pin factory example. And that's why we're rich. Wealth is measured by the goods and services we can buy, not by jobs. The point of an economy or a business even is not to create jobs. I promise you, if General Motors could make the same amount of cars with one employee, we'd be richer. Mm-hmm. But that's so counterintuitive, though. People think, well, it's all about jobs. It's not. Or people say, well, America doesn't make anything anymore. I'll point this out. America's manufacturing sector produces $2 trillion a year. If that were an economy by itself, just our manufacturing sector would be the 8th largest economy in the world. We're number 4 in steel. We're number 2 in autos. We're the largest aerospace producer in the world. We manufacture 16% of global output. And yet, we're 5% of the world's population or something. Our manufacturing sector, measured by output, is greater than Japan, Germany, and South Korea combined. So this idea
incredible
that we don't manufacture anything is absolutely insane. And I'm going to drop a link in the show note where you can get a report from the Cato Institute on this. It's called The U.S. Remains a Manufacturing Powerhouse by Colin Grabo. And we've interviewed Colin on the show about this. And it's fascinating because everybody talks like our manufacturer's been hollowed out. But what has been hollowed out is the number of jobs in manufacturing.
Right.
It used to be about 20, 25%. Now I think it's around 10 or 11. That's only because of technological advances for the most part. It's not because we've exported things to cheap labor in other countries. It's because we figured out how to make more with less employees. And here's another fallacy. To take a look at a sector by the number of people it employs, that's the wrong metric. The right metric is what's its output, not its input. Again, if General Motors could produce the same amount of cars with one employee, everybody'd be richer. we wouldn't have to work as hard to buy a car. So the right measure is economic output, not input. We see the same thing in accounting firms when we measure billable hours, right? As opposed to the output, the value to the customer. It's the same category error. But yeah, I just wanted to make that point because it's crazy to think that if we slap tariffs on things, Trump, there's three possible benefits that Trump touts from tariffs, and they're all self-contradictory. He says, one, tariffs will replace the income tax revenue, or it'll block products from coming in and it'll protect our domestic manufacturing jobs. And he says it could bring manufacturing back to the U.S. Rather than paying the tariff, they'll just come and make it here and be exempt from the tariff. Well, think about it. If it's true that tariffs are going to raise the same amount as we get from the income tax today, then there'd be no protection of domestic jobs anyway. People would still be buying the same quantity from other countries. And if it's not going to replace the income tax, I mean, there's no way it can, because domestic trade isn't that big of a base to get the same amount of tax revenue as we get. So it can't replace the income tax, and it probably is not going to protect domestic manufacturers anyway. Now, to be fair to Trump, to strongman his argument, I would say one thing. During his first term, when he implemented tariffs, some foreign manufacturers did set up in the United States to avoid the tariffs. But it's a small part of our $30 trillion economy. And it takes too long for that to happen, because you can't just move an auto factory overnight or something like that, or a chip factory. It just doesn't make any sense.
It's very interesting. So we had a few microchip manufacturing companies move into Arizona due to those tariffs, in part anyways. And they are not fully complete building the facilities. So the infrastructure required and the billions of dollars required to build these facilities also hampered their ability to make the chips. And so at the time, we had significant microchip deficits. Everybody was looking for these microchips. They couldn't buy them anywhere. Prices were going up because of that. And at the same time, these companies were investing in building new facilities, new infrastructure, and they were creating even fewer microchips in the time frame it took to build the facilities. And they're still not done. They're working on it. And they're way more high tech. And so it is fewer jobs to the whole world than there would have been at the older facilities if they had just ramped up production.
And not only that, but we, in turn, we subsidized a lot of that. And, like we said, what have we invested into Intel? $20 billion or something. And the company's dying. It just didn't keep up.
Right. Well, and of course, in Arizona specifically, we have now given these companies huge tax credits for an unknown amount of years that will create other issues in our state budgeting. And, it creates there are very interesting ramifications that happen at the same time. And so you can't look at it from a one-point perspective and saying, some people are domesticating manufacturing. Yes, that did happen. And also, we gave them tax credits, we gave them incentives, we, waited on production. There are so many other implications from the whole picture of what happens during that have been, some of them good, some of them bad.
Yeah, no, absolutely true. The other thing is, anytime a country raises tariffs, there's retaliatory tariffs back. And we've already seen that. The EU's raised tariffs, China's raised tariff on some of our, exports. It's kind of crazy. And it's just one of those unintended consequences. You can go back to Smoot-Hawley when it was passed in 1929, the big tariff increase that people said, basically started the Depression or certainly lengthened it and deepened it bigger than it would have been. And I think that's kind of where Trump is right now. He's in this very difficult spot because he's on the one hand out there telling people, he's telling the auto CEOs, I don't know if you saw this, but he was talking to domestic auto CEOs and said, do not raise prices because of these tariffs, right? Don't raise your prices. Well, what's he going to do? Is he, prices are set by the free market. Government can't do that unless he invokes some type of Defense Production Act like Harry Truman did when Harry took over the steel mills. This is a weird thought, but Trump's tariffs could lead to wage and price controls like Nixon did, because they're going to increase prices because that's what they do. That's not a bug. That's a feature. They're a tax for crying out loud.
Right.
And then to counteract those price increases, what is he going to institute wage and price controls? And the other thing that worries me about this move, and this does bring it down to the individual, since over half of us are now invested in the market with our retirement or investment portfolio. Markets hate uncertainty, and that's why they've been cratering because of these tariff announcements. The same thing happened. There's a fantastic book, I think you'd really enjoy it, called The Way the World Works by Jude Wanniski. And if you ever saw Ferris Bueller's Day Off.
Of course.
When Ben Stein's sitting, the economics instructor is sitting there talking about the Smoot-Hawley Tariff Act, and he says, anybody know the consequences? Anybody? Well, he's talking about that Smoot-Hawley Tariff Act. When that passed, that was the cause of the stock market crash in 1929. It didn't have anything to do with the Depression yet, but
Right.
This book follows the passage of the Smoot-Hawley tariff in Congress, the various committees, and then the joint, Senate, House. And when it passed, the stock market tanked because markets hate uncertainty. Yeah. And even markets also hate, not only do they hate uncertainty, but they also hate certainty of crappy economic policies. And this is one of the crappiest. It's literally, these retaliatory tariffs that, Trump is saying we need to do because they put tariffs on our stuff is like spray painting your house with graffiti because your neighbor does.
That's a wonderful visual. And also, we have seen the effects in the market. I think it's going to continue to get more volatile. And I don't know that until we have any kind of certainty of better economic policy that'll improve. And I think that has a lot of people in a panic, right? Most of us have our retirement funds invested in the market. And traditionally, that's been the best way to secure growth over the long term. And many people, especially people who are approaching retirement, are having significant doubts if their funds will be there or if they need to do something different and invest elsewhere. And so we have people even pulling out of the US market and investing in international markets because there's more security, which is, I think, a first.
Yeah, no, it's exactly right. And the thing is, supposedly Trump does listen or watch the market, and he's very interested in that. But the market is basically the wisdom of the crowds. He can't pick up the phone and browbeat the market. So the question is, if the market keeps dipping, well, then I promise you, Trump is going to get swept away in the midterms, and he's just going to become a bigger lame duck than he already is, because it's the economy, stupid, and you start messing around with the stock market, there's nobody to call. It's because of his policies.
Well, and I think the policies, you indicated earlier, if we don't have any kind of price controls, we'll see inflation at a significant rate, right? And I think in history, we have seen, maybe it's the wrong measure, but it is a measure that the populace pays attention to and looks at as a, healthy or unhealthy measurement of the economic growth or, the cost and value of our society and where we're able to afford to live. And when people are less comfortable, they're more upset with the politicians in play. However, I think this is a really interesting time because we have the ability to influence what people are looking at and thinking about, much like, focus on the trade deficit as a, media term, where we, now have this control over what people are looking at and thinking about, where they might not believe their own experience. And I think it's one of the first times in history where, well, and maybe not the first time in history, but it's, exponentially worse because of technology, and the time frame in which you can do this is much quicker, where you can show people, hey, this is what I think you should believe. Let me repeat this 27 times for you so that you start believing it, right? And it happens so quickly, and it's, continues to happen with social media. It happens with the media at large. It happens with new media outlets that are created effectively for this purpose. And without extreme media literacy, people don't know what to believe. And most of them are not educated in economics the way you are. And so they come to the table and say, well, this is what I'm being told over and over. This is what I'm believing. And maybe I just have to wait it out. Maybe these tariffs will actually improve the economy over time. And I just need to wait out this little blip in the economic timeline of this country. And I bring that up to say, particularly for our industry and for accountants, we're uniquely poised to help people understand metrics, right? And to dig deep on what that means. And while it might be an economic metric, or it might be, something outside of the accounting world, as an accountant, we have been trained to understand them, to measure them, to use them, and to interpret them. Now you can apply that knowledge outside of just financial metrics for a business, right? You can apply that knowledge, take your tax knowledge, and see what's happened historically with different tax laws and how that's influenced the economy, right? Take that knowledge and start reading bigger picture things and learning what are the likely implications of this, and are we even looking at the right measurements? Who's talking about what? And, I think that holistically, when we start talking about tariffs, you end up with a pretty significant political divide where you have, half the country saying, this will be great. This will fix all the problems. This will make sure that it's America first, US first. And then we have half the country saying, that's insanity. That's not how this works. And this is why. But at the same time, many of the people who are on the tariffs are great, don't necessarily have the ability, the resources, or the education, which us accountants do, to go back and really analyze it for themselves. And history, I think, has a tendency of repeating itself. So looking at historical analysis is probably the best indicator that we have to understand what could happen, what the likely outcome is, and how long we'll see increased prices and repressed economy.
Yeah, and when you get into that history, especially the history of free trade versus protectionism, is very complicated because the parties have gone back and forth. Right now the Republicans are pro-tariff. In the 80s, are you kidding me? You couldn't find a free trader among the Republican Party if you try. It was the Democrats that were smashing Sony TVs on the steps of the Capitol, if you remember that, and Buy America. But what's really interesting is what Trump did with tariffs. When Biden came in, he kept them all in place. So I'm confused now which party thinks what, but Trump has certainly changed or moved the Overton window to pro-tariff, and now his MAGA base is all in on tariffs. But I'm telling you, when you read economists, then you have a hard time finding any sane economist who's pro-tariff. I mean, the number of economists that are pro-tariff could probably fit in a Mini Cooper with room for a portly chauffeur. They're not out there. I mean, this is something that's absolutely settled in economics, that free trade drives wealth. I mean, I think one of the least talked about stories in the past 20 years has been 1 billion people have been moved out of bone-crushing poverty. I'm talking like $1.50 a day level poverty in the world. 1 billion people. And how did that happen? It happened because of free trade. Mostly it was China and India that took, but because of free trade, those countries are now wealthier. I mean, China's middle class is bigger than our entire country, right? And to me, that's what economics is all about. It's about, and business, it's about human flourishing. I want to see people rise out of poverty. You can't do that if you're not a free trader. I mean, North Korea has a philosophy called Juche, and it means self-sufficiency. They don't want to rely on anybody else. And look at where it's got them. They're called the hermit kingdom for a reason, right? They're completely isolated. They do rely on trade. They just don't admit it from China. And they also rely on a lot of aid, food aid and other things because they can't grow enough to feed themselves. That's what we're looking at. We use tariffs. It's a blockade of trade. We blockade countries that we're at war with. We certainly don't blockade our allies like Canada and Mexico. I mean, we could have a fair debate on should we impose tariffs on China. And I don't think we should because it punishes the people. If you want to punish the government, I'm all for it. But I don't want to punish the people of China. I have nothing against them. If they do come up with a cure for cancer, I want to be free to be able to buy it without Trump slapping 100% tariff on it because our drug companies didn't come up with it.
Yeah, no, and I think it's a really interesting point that you bring up, which is this type of economic policy, this type of political policy, all of it affects the people and the humans of this world, right? And if we look at it from the perspective of humanity, we want ever rising tides for everybody across the board, right? And while that's, sometimes possible, sometimes not possible, having the ability to work with people in different places definitely increases everybody's wealth. And it diversifies what we're able to do. And it also increases the value. I mean, we can relate that back to our accounting firms here in the US, where we've seen most firms now have a team of outsourced support from other countries, whether it be Indonesia or India, or, I have a team member in Africa, right? And it's wonderful. And she's brilliant, right?
Yep.
And so, we are able to source knowledge and the ability to have those service workers, right, in our firms, just increase the abilities that we have for our local companies. And so while our clients are predominantly US based, we are helping our local economy by making sure that these businesses have better insights, better strategy. They're thinking about their financial decisions in a more educated way. And we're able to support our local US economy with support from all over the world. Which, of course, if they did a tariff on services, I wouldn't be able to afford to do that, right? And so we wouldn't even be able to leverage their help to boost our own economy.
Yeah, it's a great point. And this is another issue with the trade deficit statistics that we have. That trade deficit only relates to goods. And yet, one of the comparative advantages that we have in the US of A is services. So all the people coming here to our universities that are world class, the best in the world, bar none. I mean, we lead the world in universities. And a lot of people flock here to study. Well, that's not in the trade deficit because it's a service. Or our advertising agencies, our accounting firms, none of those services are counted in these trade deficits, but yet they're a big part of our economy. So just because they're not goods, they're more mind power, they're not counted. And even if a country does run a deficit with another country, the flip side of that is the capital surplus that comes back into our country. So if we run a deficit with Japan, well, what is Japan going to do with a bunch of our dollar bills? They're either going to buy our products, right? Or they're going to invest in our stock market, So we're going to run a trade deficit with them, but we're going to have a capital surplus. That's the debit and credit of the trade balance, the trade statistics. And so what? There's no correlation between that and economic growth or wealth creation. It's just an accounting convention. It doesn't explain reality. This kind of goes back to debits don't equal credits in the real world, and people get really upset when I say that, but I can prove it. What happens when a company buys another company whose book value is, say, I'm making it up, but let's say $1 million, but the purchase price was $18.2 billion that the company paid to acquire the other? This is what happened with Facebook and WhatsApp, by the way. WhatsApp probably didn't even have $1 million book value. It was 50 employees when Facebook bought WhatsApp for $18.2 billion. Where do we put the difference as accountants?
Goodwill.
Goodwill. You know what goodwill is, Liz? It's the word we use to describe our ignorance. Because accounting can't say anything about value.
Right.
It's silent with respect to value, and it has to be, because accounting was designed to record transactions at the agreed upon price after the fact. It has nothing to say about value. That's why mark to market is so controversial, and Warren Buffett hates it. He called it pure fiction, because unless there's a well-established market like shares in a company, a public company, how do I value a private company?
Right.
Accounting can't help me do that.
Right. It's a very interesting concept. So let's pull this whole conversation on tariffs back to our industry. What do we think the implication? Well, what do you think the implication is on tariffs being imposed on our trade partners, our allies, to the accounting industry?
I think we're going to have to explain to our customers why their stock market portfolio is dropping. Other than that, we're all going to be poorer because of it, because we're going to have less choice. Some things are probably going to be priced out of people's reach because of these tariffs. Other countries could start, upping the tariff game, and the whole world could slip into a recession or worse, like it did in the 30s. It's a really good question. And I don't like to talk about solutions as an economist. Economists don't believe there's anything such thing as a solution. They only talk about trade-offs. There's no solutions. There's only trade-offs. But if I could be dictator for a day, I would have Congress take all the tariff responsibility away from Trump, and they could do it today if they wanted to. Congress has the authority over taxation. And somehow over the years, since post-World War II, they delegated more and more tariff responsibility to the president. The logic being, well, we're 535 members. We have diverse constituencies in different states and a lot of special interests that we have to cater to. Therefore, we need a president who can speak for the entire country. And the goal, of course, was to reduce tariffs post-World War II. Well, now a ton of authority has been granted to the president. Congress could take it back today. And the question is, will they?
Probably not for 2 years. But I do think it'll be very interesting for our industry. I've been having a lot of client conversations around what do we do? Some of our clients are heavy equipment. They need equipment, right? And so we're advising them, hey, if you were planning to buy that vehicle or that piece of machinery in the next 2 years and you have the capital to do it today, do it today. We're talking about long-term planning, strategic planning, looking at what does happen if our economy goes further down or the market has more issues and volatility. What does that look like? What about if the cost of capital continues to increase and we see rising interest rates and the ability to get any kind of loan or bank note to help with growth becomes very, very restrictive? What do your financial statements need to look like? How do we plan for that, right? And so we're talking a lot about strategic planning, and from what I have found really interesting from a client base is we have clients all over the political spectrum, right? And every single one of them is like, what does this mean for my business? And what does this mean for our economy, my clients, my customers, my whole supply chain? And how do I plan for that, right? And it's very interesting. I know our ecom team has been having lots of conversations about inventory and how to acquire their inventory. What does it look like? How to plan for the tariffs, how to price. There's so many implications, but nobody on any part of the political spectrum is saying there will be no impact. Everybody is expecting an impact. And I think as accountants, we are uniquely suited to actually start that strategic planning and start working with them to measure the right metrics and look at the right things so that they understand and don't have to fold.
Yeah. Definitely pricing is a big part of this, because how are they going to absorb that tariff? Are they going to maybe split it have the customer pay half of it? Right. Again, it depends on the demand elasticity of the demand curve, but it's a huge issue, and it's just disruptive as well. It just creates so much busy work that shouldn't be there. I mean, the goal should be zero tariffs. And when Trump renegotiated NAFTA with Canada and Mexico, they had zero tariffs on thousands of products. Why he wants to turn back the clock on something that he negotiated and signed and triumphed as the greatest trade deal ever is beyond me. I can't figure this out. I can't figure out what's in his head. Some of the people that advise him, especially in the first term, and I'm talking about his Council of Economic Advisors, he had Larry Kudlow in there. He had Stephen Moore, Kevin Hassett, who's in there now. These guys are all free traders. And they were telling him, don't do this, right. Don't do that. And I don't know. I don't know if he's going to listen to the market. I'm really worried about this because it's just crazy economics. It goes against everything we know.
It is a very interesting time, that is for sure. So I think we're wrapping up, and I'd like to summarize today by saying, first off, Ron, thank you so much for your insight on this topic. It's incredible. I always appreciate when you come, especially with your ad libs around like the Mini Cooper and the Economist. It's good visuals. I understand. I can, visualize the graffiti on my neighbor's door, but I can also say, tariffs from an economic policy, maybe not the best for our economy. We'll see the implications. We've seen the implications in history, and we need to plan for it as accountants and brace for impact. I can only hypothesize that these tariffs are coming from political machinations that are beyond the economics that we will see. And unfortunately, we get to bear the brunt of that and measure it for everybody to see in the future, which will be fun. Thank you again for being here. I really appreciate it. And
thanks for having me, Liz.
See you guys later.
All right. Have a good one.
The Center for Accounting Transformation provides business professionals with a network for utilizing innovations that are ready for adoption, the training and resources necessary to apply those innovations, and an opportunity to engage the talent and community needed to further the pursuit of innovative accounting practices that drive responsible and mindful business performance. Find out more at our website, www.improvetheworld.net. And if you're interested in sharing your own transformation stories, please contact us there.